Please remember that futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I author in my weekly written reports. Prices shown on charts and quote bars are in real time and take into account all known activity up to this point in time. If you'd like to read more of this disclaimer, simply hit the pause key on your computer screen. Welcome, traders. I'm Boyd Baker. Thanks for tuning in to my futures and options update. Today is Tuesday, May 17th at about 3:30 p.m. If you're not tuning into the commodity markets, I'm glad you're watching this update. There's a lot of markets which are starting to move. We're getting a lot of calls into the office, particularly about the gold market. Gold's finally started to waken up. We see a bottom that came in here last fall around the 1050 area. You can see on the weekly chart that we've pushed up into the 1300 level, backed off a little bit here about 1280. We look at a daily chart here on August gold. The June gold is the front month right now, but you only have about 2 weeks left to trade that. So let's talk about the August gold futures. Seems to really be holding this 18-day moving average quite well right there at about the 1272 area. You've backed off from that 1300 level. I think if you're a bull in this marketplace, somewhere down here into that 1250 to 1270 area, that's a zone that you should see act as support. So if you're bullish, feel free to contact us. We can devise some strategies, option strategies here in the August gold options. Going into the crude oil market, this is a market that we've talked about on previous updates last fall, talking about the lows coming in here down at the $26, $27 area. You have a nice double bottom here that formed last fall. This market looks like it's almost doubled in price. We're pushing $48, $49. At $52, you've doubled the price of crude oil from where it was just last fall. That is a significant move, folks, in no longer than 6 months. So this market is on a bull run right now. Now on a weekly chart, it doesn't look like it's that big of a move because you come from the $100 level. But when you look at a daily crude oil chart, and this is July crude oil, you can see now the July bottomed out here about the $31 area, but still that's a significant uptrend that's been working up here from $30 or so all the way to approaching the $50 zone. Now be careful if you're a bull in crude oil. I think we can challenge the $50 area, maybe a little bit above it, go back and challenge some of the highs that we saw back up here, 52, 54. But be very careful because you're seeing a lot of consolidation up here towards the $50 area. My opinion is that we can spend some time up here. There's specific option strategies to consider if we're going to spend some time up around $50. I'd be happy to discuss that with you. Other markets that people are talking about, this wheat market. Wow, it's a trade which has been a bear market for a better part of 4 years. Wheat is being grown somewhere in the world just about at every cycle, both winter wheat and spring wheat, and you have 2 different hemispheres. So there's a lot of wheat out there. The world's been awash in wheat. But this is a market which is having a real hard time making a new low really below the 450 level. If we look at the front month July wheat contract, you can see 3 drives here into the 450 area, and the market's really holding that area as support. So watch this wheat market. Is it breaking out? Well, it's certainly in a buy signal or buy configuration on the stochastic studies right now. It broke above the 18-day average, so I wouldn't be surprised to see wheat market come to life here. If, again, you're bullish on the wheat, there's some very inexpensive calls that one might consider. Again, give us a call here and we'll help devise a strategy for you. Now, finally, we're going to talk about the weekly sugar market and also the daily charts. Please go back on the updates from last fall and through the winter where we talked about sugar potentially bottoming down here towards this 10-cent area. It's a nice V bottom or a head and shoulders bottom that we talked about. There was a lot of fundamental reasons why we thought that could happen, driven by El Nino and production being declines not only in Brazil but also in Indonesia, where it was being affected by El Nino. This market has really woken up. It's gone from 10 cents and pushing up into the 17-cent area. That is on the weekly chart. When we look at the daily October sugar, so you can look at the longer-term October sugar, this market is just making new high after new high. Seems to be hugging the 18-day moving average very well. Whenever you've had pullbacks, it seems to be holding quite well. I wouldn't be surprised to see this market continue on up and make new contract highs. So again, if you have any questions on these markets, I'd like to help you out here. Please call me at 866-973-2079. Callers are going to receive a free options trading guide put out by the CME group here. It's an excellent introductory guide to trading options, and I'll also sign you up for my weekly futures and options update. It's a written update that you'll get every Wednesday night. Again, call me, 866-973-2079.